Good time then to bring on board our experts and figure out where the market is going to move from here. Kunal, Nooresh joining on the show. We've got Daljeet Singh Kohli as well joining in right now. Kunal, hi, afternoon. First, a word on the index. It's been a very tempered sort of day. Now you're finally seeing a bit of a lift off. Where do you think the expiry is going to close in on?
Well, yeah, I think it looks attractive that the markets are trying to the indices are making a comeback for itself. But the tone for the markets over the last so many weeks has been that the mid caps and small caps have managed to outshine, outclass, as well as outperform the larger cap names, specifically the front weighted or the higher weighted index stocks. But I think now it could probably be a time that the indices are showing signs of a breakout, specifically Bank Nifty heading towards a possible break of that 44,000 mark on the spot levels. The Nifty is also inching closer to that 90,875, which has been the high for the index over the last 2 weeks, and that was acting as a resistance of sorts. I think we are just 10 points, 12 points away from that breakout on the Nifty on the spot level. So I would probably expect momentum coming back into the indices. But again, I think this could just maybe add further boost to the market sentiment. It's not as that the large caps, when they start to participate, we may expect cool off in the mid caps and small caps. I believe that the trend would continue. It's just that the large caps, which have been maybe late in terms of participating on the upside, they could also chug along quite well.
Okay, point taken. So there's a bit of breakout which we can witness as far as the Nifty goes. But Nooresh, what's your thought on the market? It's a crucial week, as we were pointing out. A lot of important data points lined up, both in terms of macros as well as micros. Ahead of that, what's the expectation at the index level and what should the trade be?
So on the index level, the bias is positive, expecting a test of 20,000, 20,200. Even today, the markets have done well, but we are not seeing contribution come from the heavyweights. So out of the 70, 80 points move on the Nifty, 25 has been contributed by the Adani group itself. And then we look at HDFC Bank, Reliance still in the negative for the day. So we may eventually see some build up towards the upside in the heavyweights, and that could take us to 20,000, 20,200. Sustaining about 19,800 is a positive. So as of now, the trend is up, but we are seeing more contributions from the side of the, not from the heavyweights, but from everything else in the index.
Kunal, Tata Motors, 694 in the futures now. Where next?
Yeah, I think we'll hopefully look out for 700 as a breakout for Tata Motors. But I think this is a major breakout which you are looking out for the stock in terms of the previous highs. Now, I think 2015-16 high for Tata Motors was around 598, 600 approximately. And ideally, we tend to look out for at least a 20 to 25% upside for the stock post such kind of breakout. So, which means we could be looking at least 750 as a near-term target for Tata Motors. What I also like is that many of the other two-wheeler stocks, for example, Hero MotoCorp has made a very good comeback. M&M is also trying to get into a recovery from that 1550 levels. Maruti has been looking quite okay and robust about that 10,000 plus mark. So we are now, for example, start of this year, we just had maybe a couple of options from the auto pack, which looks attractive, M&M and Tata Motors. But right now, I think there are a lot many better options on the, on the auto pack, which are also trying to make a comeback for themselves.
Okay, point taken. So those were some of the stock which were buzzing around in the trading session. But let's move on and take a look at some of the other big buzzes as well. Well, on the gaining side, of course, it's the Adani group of companies that is taking the limelight. And take a look at the move on the Nifty there. It's now very close to that 19,900 mark. A lot of stocks which are actually buzzing around on account of news flow plus the momentum as well. For instance, you have on the gaining side names coming in from the metals basket. So Adani Enterprises features on that list. Coal India is another stock. You also have BPCL, which is doing quite well. And then Tata Motors is also inching higher. Nifty Bank too has managed to perk up a bit. So PNB, Bandhan Bank, Bank of Baroda, these are your top movers. From the broader markets, New India Assurance, that continues its big run, and even GIC for that matter. And if you look at the last 1 week itself, both of these counters have seen massive gains build up. Nooresh, what's your take on these two counters from the insurance pack, New India Assurance as well as GIC?
So time to take some profits off on these names. Got to remember, there are again stocks which do not have very high institutional ownership. A little bit of a lower float side of it. The stocks have moved up almost 40% in the last, say, 3 to 4 sessions. And the stocks do have a tendency to go sideways after such a move. We've seen multiple times the stock has moved up and then consolidated. So for now, after this move, one should be a little more cautious on this both these names as such.
Daljeet Singh Kohli is also with us on the show. Daljeet, your view on the Adani Group?
Good afternoon. We cannot speak specific to any stocks or any group, but I think we all know what is the news flow there, no? That Supreme Court has given some positive comments on that. And many of the investors were waiting for hearing those kind of comments. I think it's the reaction of that. And they have launched some comments, some hydrogen plant also. That news flow is also moving around. So it's probably that news flow which is working in their favor. We have no exposure to the group at all in our portfolio, and we don't intend to do also.
Okay, that's the take coming in on Adani Group of names. What's actually holding back the index today is Reliance. That's down about 0.6%. Of course, IT has been a laggard, and so is the case today with the TCS Infy. In fact, some of the mid-cap IT names which are getting clobbered more. L&T, ITC have all been non-performers, as has been the case with an HDFC Bank, which is mildly soft, Kotak, which is absolutely flat, and Indices Bank also, which is not doing anything. Nooresh, just a word on the Nifty Bank particularly, because again, you're seeing some of the private banking names not really participate in the move today.
That continues to be a concern for the whole banking index as such. When you have the top two weights not really making much of a move. So if you look at an HDFC Bank, the stock is struggling to cross the last 2-3 month highs, which is closer to that 1550 mark. Once that crosses, that would be the first indication of a trend change, because before this fall, 1550 was a support wherein it would actually bounce back from. So that would be the first indication. Then you have the earlier outperformer, which was ICICI Bank, which is also, again, holding on to the 900-920 mark, but not making a move beyond 950. So once we start seeing some bit of a follow-up action on these names, then the Bank Nifty move could accelerate. But at the same time, the other leaders like Axis Bank has made a strong recovery. You have a stronger recovery in IndusInd Bank, which has not corrected much. So the heavyweights continue to be a problem in the Bank Nifty, but we are getting the first signs, at least they've started bottoming out or finding supports at the lows in the last few days.
Okay, some of the defense names as well, of course, led by Hindustan Aeronautics are the ones which are in focus. Remember, over the weekend, you got the news flow that India is set to begin its ambitious defense projects worth about almost 1.4 lakh crore rupees. And that continues to augur well for some of these defense names. But Daljeet, a lot of debate out in the market for, the defense pack, whether the meat of the move is already behind us or not. What do you think about how defense names should be looked at?
Well, that is true that a lot of movement has already happened. So if somebody wants to join the party now, I think it will be too late, because most of these stocks are factoring in big growth for next 3-5 years. Of course, numbers will come over a period of time, and defense projects are not very short-lived. They are very long gestation period projects. Or government may have intentions of spending 1.5 lakh crores, but it will not be done in one go, and it won't be happening in just a year. It will be a process of 4 or 5 years. So what we are paying for these stocks today, if we are factoring in next 4 or 5 years of growth and giving them a multiple of 60-70 times, then obviously we have factored all of that positive things. So I guess those who are holding, they don't have to do anything. They just have to continue with it. But if somebody is looking to buy for a fresh thing, then it will be too late now.
Okay, we'll take a very quick break on that note. But as we do that, must mark out the Adani Group of stocks, which have had a stellar run throughout the day. The flagship company, of course, Adani Enterprises, like we flagged off, is up double digits. The likes of Adani Total Gas, Adani Energy Solutions are up anywhere between about 20% or so. Cumulatively, of course, the stocks have managed to add about $15 billion in market cap. The move follows after India's top court reserved its order to probe companies based on the Hindenburg report with respect to fraud and stock manipulation. And you can see those stocks hold out very, very smartly indeed. On that note, we'll take a very quick break. Back with the market, or rather closing trades right here in ET now. Still holding out okay for the index. We're still sitting at the session highs, in fact getting closer to that 19,900 print. And this despite performance really from some of the large heavies like an ICICI Bank, Reliance Industries. In fact, they're at the lowest point in the session, down about almost 0.6%. L&T has not done anything. HDFC Bank, Kotak, IndusInd Bank, some of the auto majors like Maruti, M&M, they're not participating in today's move. So index is doing up thanks to the Adani Group names, and some of the oil and gas names are the ones which are really powering ahead. Even ONGC for that matter, that's holding up nearly about 2%. So that's looking extremely good. Tata Motors, of course, has been very strong. There's Coal India looking smart. Axis Bank amongst the private banking names is looking smart indeed. There's SBI, which is holding up 1% or so too. Kunal, within the banking pack, you think this diversification, although HDFC Bank also has sort of begun to participate, but still, got loads to catch up from the likes of an Axis, IndusInd, or for that matter, an SBI, etc. You think this gap will remain with Kotak, HDFC Bank on one side and the others on the other?
Yeah, I think for most part of the rally, at least hopefully going forward, the gap would remain and persist, because there's no major buying or change in pattern in terms of the volumes for many of these stocks. Now, we ideally look out for the first sign, which is a short covering sign. Now, since most of these stocks are in the F&O and large cap names, when you see 3 months, 4 months of underperformance, it generally becomes more like a candidates where short sellers, they tend to use a lot of strategies to develop more positions into these names, and the stock remains into a range more or less with a negative or a downward bias, like what we've seen for SBI, we've seen for HDFC Bank, and we've also seen for Kotak Bank, and I think to a larger extent the likes of Axis Bank, etc. Now, when we see the first sign of rally for these stocks, and if it's led by a good amount of short covering, that's the first sign where the stock tries to change trend for itself. And that's where I think we need to catch the moves for these stocks. So as of now, what we've seen a very gradual recovery for the stock. Hopefully, if the rollovers for these stocks also, even if that drops down, that could probably indicate that maybe short rollovers have not carried forward positions for these stocks. So we'll need to see those signs emerging, for these large cap names to go into a much more stronger expectation that these stocks would probably play a catch up. But till the time those signs are not there, I believe that the underperformance would continue.
Sure, underperformance might continue in some of these names, but Daljeet, what's your view on the power sector, and after the run-up of the power financiers, what is the best way to play it, you believe?
So we are very positive on power sector, and we are holding one of the India's largest power producer in our portfolio. And also we are holding one of the transmission companies, which again is a PSU. We believe that there is a lot of potential in both these companies. See, best way to play power right now is there is a fad on renewable basically. No, but then what is the price you are paying? That valuation may not be very comfortable for investors like us who are looking for value buy. So for us, the better way to look at is the transmission and distribution companies, where we see there is a lot of investment has to go in because we are underinvested in that part. Generation, we have done a lot of investment, but transmission and distribution as a country, we have not done enough investment there. So there's a lot more to go there. And of course, the power financiers are direct beneficiary of any investments. Government has made a lot of changes in the policies where all these SEBs are now forced to pay. So which is again a very good thing for all these power producers, because earlier all that money was getting stuck at the SEB levels, state electricity boards. Now all because of by force they are supposed to pay. So that will come back to these generators and transmission companies, which is a very good thing and a long-term structural positive. So that's why we have two companies in our portfolio.
Daljeet, but what about IREDA? That's going to list tomorrow, and if you go by what the market suggestion is, it might open at quite a bit of premium as well. What should one do if you've got the allotment? Should you just book profits? And secondly, if you've not got the allotment, should you still buy at high levels tomorrow?
See, the difference is valuation part. Between the existing financiers and this new finance company, right? They are available at 1.5 times, and this one was available at 1.1 time. Now, if the listing gains itself make it 30-40% upwards, then that gap narrows down. So it doesn't leave too much scope further from here. From here onwards, it's like earlier you had only 2 options, now you have a third option. So if somebody is adding a fresh position in power finances, he has out of the 3 to choose instead of 2. That's the only difference. Otherwise, all three of them will be the similar. So we would like to go with the existing ones because they've proven their merit. They are already doing, and in fact, the other two, one is the subsidiary of the other. So REC and PFC basically, one is the subsidiary of the other. So if you buy one, you are actually getting both of them. So it's basically the tactical call the fund manager will have to decide. But otherwise, as a sector one, it's very good. Valuation gap, I think, with this listing gains will go away. So it won't leave too much scope for you.
Okay, that's the take coming in on iRadar. Of course, there's much excitement around Tata Technologies listing as well. The official date, of course, is still not out. But that said, it's the primary markets which are off late hogging all the limelight. That reminds me, let's also check in on what Honasa Consumer as well is up to. Well, the management categorically denied to us as well that, there is no ESOP selling or block happening in the stock. But the stock has been under pressure from the word go. It cracked down about 4% to start off trade and still reeling under pressure. In fact, it's only worsened from there. About a 6% cut is what you're seeing on Honasa. Remember, there were reports indicating that perhaps a chunk of employees may be looking to sell their ESOPs, the quantum being 5 to 7 odd percent. That's keeping Honasa still pretty much under pressure as we speak right now, irrespective of the management clarification. What continues to hold out is the OMCs. So HP, BPIOC looking good. There's ONGC as well, which is holding out well, a good 2% move coming in here. Nooresh, let's have a look at the charts. ONGC, HP, BP.
So all these 3-4 names, first going with OMCs, they've given a multi-month breakout. So BPCL for the last almost 12 to 18 months, every time it came closer to 400, it took a knockoff. We saw a correction in June, July also from 400 back to 330. We've broken that levels of 400. And now the trend has started wherein it could slowly and steadily have a target price of 480. So that looks promising. Same is the case with HPCL. Then if you look at IOC, that's hit almost a 5-year high now. The stock was back at 100 only in 2019. So that's a strong breakout as well. So these three names become a buy on dips. Then when we go to ONGC, although not exactly the same sector, but the stock was last at 190, 200 levels in 2018. It was at 190 when Russia-Ukraine crisis hit the markets and crude was at $135. So that's the price point it is trying to break. So that's like a 3 to 5 year breakout as well. So all these names remain a buy on dips. As of now, there has been a little bit of a rally, but buy on dips and a hold at current levels, maybe can buy a partial position also.
Point taken. So that's the latest coming in on some of these oil marketing companies. But the other space which is buzzing is mining as well. So you have names like Coal India doing well. Of course, there's GMDC, which is holding up okay. And a couple of these other names from the entire mining vertical is also something to watch out for. Nooresh, your view on some of these?
So out of that, NMDC looks the most interesting because that has been a slow and steady trend right from the time it broke out about 115, 120 levels. Today also the stock has crossed the last 2-week highs, which were made around this 178 mark. So a slow and steady rally, the stock is coming back to 2022 levels. And overall iron ore prices have also been on an uptick. So NMDC looks interesting. Apart from that, GMDC, OMDC are more speculative in nature in terms of the expectation of mines, etc. going around. The risky bet in this sector could next be Hindustan Copper, which has been sideways and consolidating after that move from 125 to 170. The stock last time saw a big spike in 2021 towards this 175 to 185 mark. So eventually maybe this could be the one which is a risky bet which can do well, but NMDC remains the top bet.
Okay, that's the take coming in on some of those mining stocks. What's also holding out well and has been hitting a record high in today has been MCX. That stock on last count was up a good 7%. Of course, they've rolled out a public announcement and announced the appointment of a new MD and CEO. But that aside, we should just bring out the 3-month chart on MCX. It's been quite the mover. And the big move in MCX, I think, has happened only in the last 1 month or so. If we can just bring out the MTD chart too. There you go. In the last 3 months, it's a 91% move. And the bunch of the rally has only happened in the last 1 month or so. Kunal, what do you see on the charts for MCX? Can one still buy into it?
Not really, but I think for someone who's bought, I think it's a good time to still hold on to the stock because what I actually see on the charts is that there is no major correction the stock has shown from this move from 1400 to 3000 plus where the stock has crossed today. So even though I think there was a correction maybe start of the month of November, it was just to the tune of 3%, 4% for the stock, and I think it had corrected from 2600 to 2500 in a matter of I think one to two trading sessions. But from there on, the stock has just moved up higher. So when you see such kind of an phase where the momentum is extremely high and no phase of correction coming back into the stock price, entering those stocks may become a bit more tricky. So you'll have to be a bit more patient for someone who's missed out and wait out for that odd phase of correction. In case if it corrects by a 10% kind of a margin, that could be a good point to start entering into the stock as well as looking to buy on dips.
Okay, so don't be in a hurry to get into the stock of MCX, but let's take the closing trade ideas from our chartists as well. Nooresh, you go first.
So, like Tata Power, which has seen a big price volume breakout today, the stock has come back very close to the highs of the last 2 years. So, looks like a fresh breakout which should continue towards an all-time high.
What about your closing trade ideas?
That'll be a buy on NMDC. Looks very attractive as a chart. Stock breaking past about 180 levels also. So that generally puts the stock into a multi-month breakout. Looks attractive in terms of momentum. Would look to buy.
Okay, point taken. Time now to slip into a very short break.